Welcome back. A Fox Business Alert: stocks soaring to a new high in the wake of President Trump's speech to Congress. The Dow closing above 21,000 for the first time ever. Guest Brian Brenberg, chair of the business and finance at King's College in New York City, is here now to break down what all of this means. I do know that it's good news, right?
Absolutely, it's good news. This is a record high for the Dow, 1,000 points in 24 days. That's the biggest run-up we've seen since 1999. So the stock market is soaring. They love the president's address the other night.
Right
very
after
positive.
his address. So they feel like things are going in a good direction, obviously.
They loved his tone. He was very positive, very constructive, and the market wanted to see him do that because they think that's going to help him get his policies through, and everything depends on his policies.
All right, so positivity, and then 4 factors specifically, right?
Well, so I think Americans, when they look at the economy, should look at the stock market and say that's good, but underlying that, what's really going on? And I would say people need to look at GDP growth. They need to look at the labor force participation rate. They need to look at the hiring rate. These are the kinds of things that drive the economy forward and help average Americans. So in terms of GDP growth, the GDP growth has been very slow in this country over the past 8 years, particularly last year. We'd love to see that move up. We think that tax cuts and regulatory reform can help us to get there.
Is there a certain marker, level that we do
Historically,
would like to get to?
the economy has grown at about 3%. We've been at 2% the past 8 years, so we'd like to see that climb above 3%. The president has talked about that as his goal, the 3 to 4% growth.
Right. Okay, so the participation rate?
It's been very low. We've seen a lot of people drop out of the labor force over the past 8 years. That means they've given up looking for work. It's very bad news for the economy.
That's why they always say the unemployment numbers are deceiving.
Exactly, because when people drop out of the labor force, they're not counted as unemployed. It's very odd to the average American, but that's simply how we count it. So we want to see people move back into the labor force. That means that they're feeling good again. They're looking for jobs. Companies are hiring.
And the wage rate?
Yeah, so wages have been very slow to grow over the last 8 years, even longer than that, really, around 3% or so. We want to see that move up to 4 or 5%. So again, as the economy grows, companies hire, businesses invest, that pushes wages back up.
Yeah, that brings us to our hiring rate.
Exactly, exactly.
Well, that's what President Trump has said from the very beginning. He said that his administration would be about jobs, jobs, jobs. And he's been working hard to do that even before he got into office.
Yeah, and the stock market is moving up because investors think he's going to deliver on that. But again, the average American wants to look at some of these underlying factors and say, are those things actually happening? Are we seeing the growth? Because that's going to put money in their pockets, and when they get money in their pockets, that sort of affirms what's happening in the stock market.
Now, you and I were talking about this earlier, though, before the show started, and you said this is reminiscent of the tech bubble, which could maybe not be a good thing?
Well, as I said earlier, the run-up we've seen lately was matched only in 1999 by the run-up before the stock market bubble with the tech bubble. So again, I don't know if these situations are analogous, but when the market moves up that quickly, you know investor expectations are high, and the important thing is, will the real economy deliver? And that means the president has to deliver on his policies. If he can do that, then I think the run-ups, we're going to be just fine. If he has some trouble with tax reform, healthcare reform, that's when the stock market might be getting ahead of itself.
So finally, people wake up this morning, they're sitting around the kitchen table. What did they take away from this? What should they do? How should they use it?
What they should be watching is, can the president get his policies through? If that happens, then investors are right. The stock market is where it should be. If he has trouble with his policies, that's when the stock market gets into trouble. So watch what happens with tax reform. Watch what happens with health care.
All right. Thank you so much, Brian. Appreciate it.
Yep.